I'm trying to assist folks, or, at the very least, just make people aware that they have this huge glut of money. Collectively, we as Americans, I'll call it 10 trillion, kind of sitting on the sidelines.
Welcome to the Real Estate Marathon Podcast, your guide in the race to financial freedom through real estate investing and sound financial practices. This podcast is for anyone interested in learning more about real estate investing, personal finances, and a new take on traditional retirement. Now, here are your hosts, Larry Fierro and Mike Moe.
What's going on, everybody? Welcome to the Real Estate Marathon Podcast, your guide on the race to financial freedom through real estate investing and sound financial practices. My name is Mike Moe, one of the hosts of this show, joined today with Larry Fierro. Mr. Fierro, what's up, man?
Oh, not much, Mike. Not much. I'm glad that you're back on here with me, man. I got to tell you, I did the interview with Dan by myself because you had other things going on at that point, and I just didn't struggle, but I missed you, So
yeah, that was nice to get to sit back and listen to this one as it was one of our audience members here and critique you with my pen and notepad here. So,
and of course you were kind to me.
Oh, never.
I made one statement in it coming up about you not being there and you'd be upset with a couple of the terms that I used with that weren't very technologically friendly. So I thought that was kind of funny. Yes. I used the term checkbook, and I was like, Mike's head would have exploded by now.
I don't know, man. Half our listeners probably don't even know what the heck a checkbook is, let alone how to balance one.
Okay, so checking account. Anytime I say checkbook, it's checking account, and I'll actually bring one. I've got one in my museum in my in my office, so I'll bring one up and show you what it is.
There you go. Yeah.
So, but yeah, no, it was pretty good. I've got. I learned a lot of information. I'm excited for the listeners to hear this one. And I'm sure that you would have had some additional questions. And he did say that when we want to have him back, he would definitely come back and give you an opportunity to talk to him about some of the stuff that he had going on.
Heck yeah. All right, man. We got to warm up to start this thing off.
We do. Basically what I'm doing is I'm defining a self-directed account. So a self-directed account or self-directed individual retirement account enables you to have control on all your investments. You are not limited to the basic bonds, mutual funds, or stocks. You have the means to invest on alternative assets like partnerships, gold, and real estate. Ooh,
there you go.
Real estate. That's a big deal. So what does that mean?
I don't know.
Self-explanatory. Well, self-directed account just means that you can use your retirement money and invest in syndications, invest in real estate, and keep them in the retirement account. So all of your profit and things like that goes towards extremely, not extremely, but massively increasing your wealth.
Yeah. You definitely get a little bit more control, and there's a little bit more red tape to self-directed IRAs, but definitely a good tool for those who qualify for sure.
Absolutely. So, that's pretty much everything I had, Mike. Everybody should be warmed up, limber. You want to start this race, the marathon, with Dan Kryzanowski?
Yeah, man. Let's do it.
All right. We got Dan Kryzanowski today here on the podcast with us. How are you doing today, Dan?
Wonderful, Larry. Great to be here, bud.
Oh, thank you. We appreciate you having here. I usually have Mike here with me, but Mike wasn't able to make it today. So I'm going to try and fly solo and see how that goes. Just wanted to touch base with you a little bit today and see if we can get some background about who you are and what you've been doing.
Yeah. So, I guess just for context, my background, originally from the Northeast, grew up in Scranton, PA. So, politics aside, but I played on Biden's Little League field, and then I rode at Penn with Trump Jr. my freshman year. So, I'm an equal opportunity, investor, let's call it, from that standpoint. And, my very, probably like a lot of folks, especially in the Northeast, worked big companies, Merrill, GE, went to Wharton, et cetera. And then the financial crisis came through. And I think for me, to kind of knock out a 9-to-5 at the same place for the next 30, 40 years wasn't in my blood. It's just not how I'm wired. So my wife's from Mexico. We made the conscious move to move back to Austin, Texas. So we've been here for the last decade. So you can say we were smart to predict the boom down here in Austin. it's been good for me because, besides being able to keep it weird and all of that, I professionally have been in a variety of fintech and real estate in my 9 to 5. And I think that's really sculpted, where I am and where my passion and where I feel I can, help people, particularly these days.
Yeah. Now, do you invest in real estate? Do you stay in the stocks? Where do you usually keep all of your investments?
It primarily is towards real estate. There's some stocks. So I'll preface to say, I think it's always healthy to be diversified. And my big light bulb moment was I was fortunate to speak at a family office high net worth show where, even in front of open doors, they say, I'm just not 60-40 stocks bonds. Like I'm kind of the opposite. I have a majority of my stuff in real estate, private, tax advantaged. And that's kind of been my mindset. Recently I learned these self-directed accounts and being able to use your retirement dollars almost a decade ago. I was co-best man in a wedding, and I said, what do you do? And all I heard him say was 15%. I'm like, I'm in. And then he said, and then for me, he said, you can use your retirement dollars. And I was just mind blown. I'm like, what? I thought I'm stuck at my Fidelity. He's like, no. So that's been a lot of my journey. And I think what I'm trying to assist folks, at the very least, just make people aware that they have this huge glut of money. Collectively, we as Americans, I'll call it 10 trillion, kind of sitting on the sidelines that is not active in an asset, or your community that could be moved into, I think, at least the way I view my portfolio, kind of lower-ish risk, higher-ish return sort of assets.
Yeah. Part of the reason we wanted to have you on here is because of your financial background.
Mm-hmm.
We've discussed this part of the reason why we started our podcast, because we noticed how many people were living paycheck to paycheck. And that's actually quite a scary number. And Mike and I are both of the mindset that we definitely don't want to do a 9 to 5 for 60, 65 years and then retire and enjoy 12 years before, the inevitable. And so what I wanted to talk to you about today, I wanted to kind of start out with a little bit of the checkbook control, trying to help people figure out how to control their checkbook and get the money for investing, and then maybe jump into some of the self-directed accounts.
Absolutely. Yeah. So, with checkbook, I'm glad you brought up checkbook control because, we feel folks should have access to their money at all times, and it should be easy to contribute. And frankly, there should be no fine print. I think, people say, and it is true, this is how the millennial mindset is, but I think also for our generation, it should be easy. And even, folks, as you said, you are working hourly, or there's been a job situation, a divorce, a whole lot of things can happen where you're just not sitting on this huge pension, maybe as our parents were way back when. So with that, the checkbook control account, what it does, it makes it very easy to open, to contribute or roll over, and then to use that money just like you would with your piggy bank checking account. And I preface that because the other self-directed, other retirement accounts in this space are very different than that. It's almost like going to mom and dad for an allowance that you're ultimately going to get, but you got to pull and prod and all this other stuff for a few hours, which it's just frankly not worth anybody's time.
Yep. Now, with checkbook control, like I know with my kids, when I set them up, we actually had them do checkbooks in our checking accounts. Mike would hate the fact that I'm using the term checkbooks because I'm almost 50, and technology in me has gotten along to a certain point, but I still have my old fashioned checkbook and everything. Sure. And it drives Mike nuts with me having the checkbook. So he is a proponent of using a lot of the programs, which is a good thing. So what we did with my children was we actually had them set up an account at the same bank that we are. That way, when they go out and do their college and everything, we could transfer money easily. Yeah. So they had access no matter what part of the country they were in, they could get to it. Now, are you a proponent with the checkbook control of paying yourself first, having it set up automatically, things like that?
Yes. First, likewise with my son, we're at the same financial institution, and that's great because I'm able to transfer money in and out. And lo and behold, I see and even now, if he ever does look back, I say, print X thousand principal out, or, $20 dividend in coming in, to really show, hey, this is what was going on with your money, particularly as an investor, not just sitting in, 0.001% savings account. So I'm a proponent. I'm a little old school like you. I still write old school checks, particularly for the first investment with a certain person. I feel, I don't know, there's something about it that I like. with that.
It's comforting.
It is in a way, or it's like, you at least know that you're signing your money away, as opposed to, it gives you a second thought on that gut feel. I'll put it that way. It gives you that instead of just clicking a button. So in all seriousness, I do think that's good for, initial investors to literally sign your name instead of just kind of wiring like you swipe and, buy 100 Starbucks from that standpoint. But checkbook control in general, I think of the term more for retirement accounts. And if I could, a brief history. So self-directed accounts have been around since the 1970s, but a lot of these have been custodial. Or it's been a very high-priced, expensive lawyer that sets this up. In short, you do not have checkbook control. You're going to a third party that really has no insights into what you want to do with your money, et cetera. And you have to fill out their forms and be on their timeline. It could be a little bit frustrating. So, with checkbook control, it's more about the access, I think, to it. Yeah. And also the transparency. And, also it's linked up to a bank. You bring up a great point, is that, by default, checkbook is part of a bank. You have a checkbook, you can look back, you can see transactions. Whereas, and I've had different custodial accounts earlier in my career. And I look now, I can't even look back over a year, but I'm like, but the way I invest is longer term real estate investments. And I can't even see now my dividends from over a year ago. Very frustrating. And this is somebody that's charging me for a setup fee, an annual fee, God forbid I made some good investments, higher fees on top of that, as opposed to, kind of a flat monthly fee that common in different sort of checkbook control accounts these days.
Nice. So now for the listeners out there just starting out, we have a lot of millennials that we're trying to get them to get their credit scores and everything squared away. What do you recommend as far as where to start with self-directed accounts in order to get their retirement set?
Yeah. So I'd say it depends on the type of profession. Either way though, it's going to be the same net effect. So as you said, first is just opening an account. So for example, with Rocket Dollar, I'm associated with, let's say somebody is W-2'd, meaning you do not have self-employed income, especially with the tax season being pushed out another few months, assuming you're fortunate enough, you're feeling comfortable. I would, and I look back, the best thing my, parents advised was max out your stuff, which I did. And when I finally picked up my head, I was sitting on a 6-figure self-directed account, or IRA, I should say, it became self-directed. So for millennials out there, I'd say open an account. Either if you have money to put in now, say you're getting a tax return, throw a few thousand and even do it for 2019 or 2020 if you're fortunate. And then look to see what you want to invest in. What I think is great, there's so many great crowdfunding campaigns. I know we have to be a little bit cautious with, the profitability of a restaurant in modern times, but I would say versus, 5-10 years ago when it was kind of Wild West, as an equity investor supporting somebody in your community, a lot of these crowdfunding say it's going to come off the first year's revenue, right off the top, the tippy top. It's the most preferred debt you can have to be paid back. There's something called acre trader. Guess what? Land's not going anywhere. And what is it? Mark Twain said, buy land. There's not more of it. And, there's different platforms out there that you can get into some, I'd say, very solid, more conservative, higher return assets to kind of test the waters and doing it with the checkbook. So that's one. And the second thing, I'd say, let's say our realtor friends out here, if you're 1099, realize right off the bat, you're not limited to say the 6,000 like your W-2 friends. Say you have a true rock star year, you could salary defer 19,000 like your W-2 friends, and then 20% of your net earnings.
Oh.
So, even if it's not this year or next year, the benefit of having this account open is, down the road, you may have one of these sort of rock star years. And it's really cool having this account set up because let's say you're in real estate, you like a niche, something like self-storage. And once you get to that 50K or 100K, you might say, great, I had a great year. I can contribute 40K this year. And then you can invest in something like a storage facility. So, to sum up, I would say the benefit of the checkbook control, it's just to do something, have something on the side. And I think there's a lot of things where you don't have to worry about the volatility of the stock market, but still have a pretty decent return.
Oh, very nice. Very nice. Mm-hmm. Now, the one thing that I'm kind of curious about, because we're right in the middle of the coronavirus lockdown. We had an episode at the beginning of the week. It's the Monday Morning Motivation, where we kind of talked about, trying to stay the course and not panicking too much. Now, how do you feel the coronavirus will affect markets and that sort of thing, or change the way investors are going to be investing? And do you think they should stay the course on their investing? That's a broad question. I apologize for kind of hitting you with that.
It's a good one because it's making me think that I do the right thing. So I would say yes. I mean, stay the course. And there's two ways about it. I mean, one, if you do, let's just say you put in $1,000 every month on your paycheck or $100. If you're doing dollar cost averaging and you're going to do it for the next 30 years and you're going to work W-2, continue to do it. I read a book, forget the author, but they pretty much said at any time in history is a good time to enter the stock market. And it's really statistically, it's a pretty correct statement. Mm-hmm. So even if you put, a boatload of money in a month or two ago, I would say definitely not sell. I mean, could we be back up to 30K at the end of the year? Possible, maybe, maybe not. That's one. Secondly, for folks that kind of had a glut of money in, I know myself, I mean, I put in a fair amount. And right when I left Wall Street in 04, 05, my original boss, Scott Rothbard of Lakeview Asset Management, is actually running it. I haven't, I've been along for the ups and downs. It's okay. I think where you need to be a little cautious is once you're starting to depend on it for your cash flow. For folks, 55, 60, 65 that are retiring, you have to be maybe a little more measured of what you're in. But this shouldn't be a decision you're making today. This should have been something thought about, talked with a plan, or at least talked with your family over the last few years. What am I going to be in? So with that, I'm not sweating it. I mean, I think it's sure in the short term it sucks, no doubt. But the world's going to go on, and people are going to do stuff, and companies are going to go. And the one point I would say, it's funny. I mean, for those that read Barron's, or even if you just pick a few articles out there, things were so overvalued. Certain sectors, like even price equity, was at the highest 99th percentile. It's been in the last 10 or so years. Or I just kept on reading all these stats that say, no, we're bound to have a correction. So, I'll put it this way. When I joined GE, or actually say, I'll think back when Jeff Immelt joined GE the week after 9/11, as great as Jack Welch was, I think, he kind of left on a partial, false negative, upswing that. And I think the stock market was that. I think it was just trading too high for a complete lack of fundamentals. Yeah. I don't have an exact number to throw out there, but round numbers, from 25 to almost 29, I think that was just people following the media. That was definitely not based on any sort of fundamentals. Yeah.
And I agree that the market was probably due for a correction anyway. And mm-hmm. the coronavirus probably just accelerated that a little bit more drastic than we had all hoped. Yep. But, mm-hmm. And the advice that we gave it's not really investing advice. We're not offering investing advice. I like to preface it by saying that to all the listeners, don't go out there and specifically mm-hmm. buy one stock or another based on something that we said, but just try not to panic. And the panic selling is not gonna help. Mm-hmm. So, and the one thing that we did mention, Warren Buffett quote, where he said, be cautious or scared when everybody else is greedy, and be greedy when everybody else is scared. So I've actually had our retirement bumped up. So we're investing in getting some pretty decent deals on stocks that, are probably not going to go away. Mm-hmm. So, but no, this has been fantastic information. Is there anything else that you feel that as a newbie investor that they should be cautious about other than like the correction?
Yeah, I would say don't chase, be cautious of chasing yield. As you said, some stocks have gone a lot. So for folks, their yield is just basically, the dividend divided by the price. So say a stock's trading at 100. Mm-hmm. The stock pays $1 a quarter. It's a 4% yield. So, hey, that's great. But, let's assume that stock was at $200 last week. Well, okay, that was, realize, great. You're probably not getting the dividend. It's going to go away. But even if you still got that $4 dividend, your stock went down, 50%. Yeah. So I say this also maybe for some of the older folks that aren't as sophisticated. It's like, okay, well, the Fed cut rates again, which means your CD at your community bank or credit union is 1.2% now, whatever it may be. Don't be chasing yield if you're only looking to compare the dividend yield versus the the CD rate, because a particular stock may still go down. Using an extreme example, would you buy I think it's Carnival Cruise or one of the cruise lines for their dividends? No, probably not. They're probably going to shut them down. But that would be the other thing of mindset. I'm sure, there's going to be some media about that. And some of them will be very positive, as you mentioned. Some stocks are underpriced. There's going to be some great yields. But for the average Joe Jane investor out there that doesn't look at this every day, I'd just say be very cautious on chasing yield, because the price could still go down for certain stocks.
Yeah. That's excellent advice. Well, that's pretty much everything I had for you, Dan. I appreciate you stopping down to visit with us. I don't want to take up too much of your day. I know that you probably got a bunch of stuff going on. Could you tell the listeners where they can find out more about you and get in contact with you?
Sure. So Dan, DAN, at rocketdollar.com. To learn more about, this self-directed account, checkbook control, just rocketdollar.com/learn. And as a courtesy, hopefully this is in the call notes, but for those that can spell my name, you get $100 off. So D Kryzanowski, DKRYZANOWSKI. That will ultimately get you up to $100 off your Rocket Dollar account. So if it makes sense to go down the self-directed route, reach out to me directly. But, of course, want to send a thank you out to all of our listeners here. And happy to take on any questions. And
you also have a podcast. Do you have a podcast of your own?
We do. It's called Rocket Your Dollar. So a little play on Rocket Dollar. And this will give you a feel of both other investors, other sponsors, meaning people that are raising money for deals. As we talked about, kind of in this 21st century diversified portfolio, whether it's from real estate niches like self-storage, some Bitcoin, some female entrepreneurs, you name it. This is what I think folks that are really trying to pretty up their pie chart and just call it a 60-40 stock bond split are going into. So we bring in real people raising real money with real companies and real investors. And that gives you some really good color, kind of what else is out there.
Excellent. So guys, make sure you guys go over and follow his podcast and get a hold of Dan. And I'm going to cheat a little bit, Dan. I'm going to put your last name in the show notes. So just look at the show notes. You'll get that $100 off. And I appreciate you stopping down. And I wish Mike was here, because I'm sure he'd have 150 more questions for you. So
well, I'm happy to be back on. So
excellent. I think we're going to have you come back on after this, because it's a unique experience right now. So
yes, sir.
Be safe out there, everybody. And Dan, thank you. And we'll talk to you guys later.
Thanks.
All right, ladies and gentlemen, that was Dan Kryzanowski. And say that last name 10 times fast. But dang, dude, a lot of good information that Dan was able to share with you on a lot of basic financial practices and getting your number and using self-directed accounts to achieve that retirement goal. Huh?
Yeah. And one of the things I liked, he offered our listeners $100 discount if they go on and can spell his last name. So one of the things, I love that part. So one of the things I told him I was going to do, I'm going to cheat and make sure that I printed on all of our social media and everything. And he was completely fine with that. So
there you go.
Make sure you guys go check that out.
Heck yeah, man. All right. So call to action on this episode, my man. It is what?
What is your retirement number? You need to start looking into that. Yes.
Which is it's kind of there's my phone, kind of a mind shift from the traditional retirement, because people think retirement's an age, and that's a lot of BS, man. Retirement's not an age. Retirement's a number. So figure out what your number is, because as soon as you hit that number, nobody says you got to be 55 or 65 or whatever the hell the number is now, age is. You just have to hit that number. So if you want to retire at 42 or 35 or 32, figure out what that number is you need to hit, and then you can kind of reverse engineer it back to figure out what you need to do to get there.
Yeah, definitely.
Go ahead.
I was just going to say, figure that number out, and then give Dan a call too, because he's interested in helping you achieve that number.
Yeah. Yep. And the second part of that call to action is obviously the big topic of the show today was self-directed accounts. Figure out if self-directed accounts applies to you and whether or not it's a good tool to have in your tool belt in order to hit that number.
Yep. So that's one of those things that you got to just know your number. And if you don't know what your number is, you can't know what you're working towards. So basically find that number out and start saving and get that self-directed accounts working for you.
Yep. And if you don't know, now you know.
That's it. The more you know, right? NBC. Can I even say that?
Dude, that's not NBC. If you don't know, now you know.
No. The more you know. They have those PSAs out there. So
I was quoting the Biggie Smalls, man. You from New York. Shouldn't you know this? Come on.
Well, I should, but I'm older. Biggie Smalls was like 4 years old when I was in high school. So
that's awesome. All right, dude, what else we got for him?
No, that's pretty much everything I got. I hope you guys are doing all good on this social distancing and, listening to podcasts and making it happen.
Smarten yourself up over these social distancing times, right?
That's it. All
right, dude. Thank you guys for tuning in to another episode of the Real Estate Marathon Podcast. We'll see you next time.
Take care.
Thanks for listening to the Real Estate Marathon Podcast. If you found value in any of the content from this show, consider supporting us in the following ways. Subscribe to the Real Estate Marathon Podcast. Leave a rating and review. Continue the conversation with like-minded individuals on social media by heading over to the Real Estate Marathon Podcast Facebook group or follow us on Instagram and Twitter at Real Estate Marathon Podcast.